Has the 4-year cycle finally kicked the bucket? Lynn Alden and Cathie Wood are both throwing out their predictions for where crypto's heading in 2026. The bull camp is packed right now. Enthusiasm is through the roof across the board. XRP is getting the spotlight too, with some global angles worth exploring. New index funds are queuing up to launch, which means they'll be vacuuming XRP straight off the market. We'll tap into Jake Claver's perspective around the midpoint, along with some other solid angles. Learn to this.
So are you in the camp of 4-year cycle still on cue, no real change in how these cycles have gone in the past, or do you think that has shifted some?
My base case is the 4-year cycle is no longer really relevant. It arguably hasn't been relevant for the past cycle either. Early on, whenever the supply halving happened, that was a very big change to Bitcoin's kind of new supply coming out. Whereas now, the annual supply inflation rate is well under 1%. It's a lower supply growth than gold as on a percentage basis. And so I don't really view that as like the main driver anymore. I think there's potentially some selling around the psychology of the 4-year cycle.
Is this a time to DCA? Bitcoin trading literally as we record at around 90K. Is this a DCA time for Bitcoin?
I think so. And almost by definition, if someone's dollar cost averaging, it's always the right time. That's the kind of point is you're not really trying to time the market. I think it's more of a question of, is it time to accelerate the DCA a little bit? Generally speaking, when the sentiment comes off, we've seen the Bitcoin Treasury MNAVs disappear. We've seen some of the metrics I look at, like market value compared to on-chain cost basis, that is compressed quite significantly. Makes it a lot more attractive. Overall enthusiasm is elsewhere. It's on AI, it's on gold. Public sentiment around Bitcoin is pretty low. I generally think this is the time to lean into it now. But I think as a larger slice of a portfolio, I think it makes sense to buy the fear rather than kind of buy the enthusiasm.
The old saying holds up. Panic in the air usually signals buying season. Euphoria everywhere, that's your cue to pump the brakes. Now look, I'm not over here playing Nostradamus with perfect entry and exit points. My play is simpler. Keep stacking what I trust over the coming years. Then wait for those assets to catch their wave when utility actually drives the price. That's the payoff I'm chasing. Cathie Wood's weighing in on whether this 4-year cycle still exists or not. Getting perspective from these two just makes sense. They're plugged into the Crypto Pulse right now. Let's listen to what she's got.
Bitcoin is behaving more like a risk-on asset. It has played the risk-off role at different times during the European sovereign debt crisis, during our regional bank crisis. But right now, it's risk-on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent. And I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago.
Cathie Wood's breaking down the pattern shift here. Previous cycles gave us rocket launches followed by absolute bloodbaths where assets would bleed 70, 80, sometimes 90% of their value. The difference now, big money's flowing in through institutional channels like 401ks and retirement portfolios. Those gut-wrenching drops might not play out the same way anymore. Her bold claim, Bitcoin already hit its floor, and the trajectory from here is purely upward. Look, Cathie's clearly cheerleading her own positions. That's expected. But the optimistic energy building toward next year feels legitimate. Here's where it gets interesting, though. Bitcoin sitting at 100,000 forces a question for these big players. Do I drop that cash on a single Bitcoin or pivot to XRP? That same money gets you around 44 to 45,000 XRP, maybe closer to 50,000 depending on the day. Zoom out 5 or 10 years down the road. Which asset do you genuinely see delivering bigger returns? So you could grab one Bitcoin right now, or you could pick up 45,000 XRP. Which one makes more sense? Institutional players in Wales are wrestling with this exact question, and they're leaning toward XRP as the better play compared to Bitcoin. Now on deck, we also have Wisdom Tree Index Fund that is going to represent 19% of XRP. And look, index funds are absolutely everywhere at this point. Never heard of them? Think of it like making a smoothie. You're tossing in Bitcoin, some ETH, a bit of Solana, XRP, whatever cryptos they feel like blending together. Could be 10 different ingredients. Every crypto gets a chunk of that recipe. When XRP makes it in, sometimes it's a small 5% splash. Other times, it's a hefty 19% scoop. The real story here is how much XRP is about to get vacuumed up. Look at Bitwise running their fund. XRP sits at 5% of their $1.25 billion operation. Crunch those numbers with me. That's $64 million in XRP getting grabbed straight off the spot market. Okay, so things are getting really interesting in the index fund space right now. We've got that Bitwise 10 crypto index we covered earlier. XRP landed itself a solid 5.17% slice of the pie, hanging out in the top 3 spots with Bitcoin and Ethereum. That's going to pull in roughly $64 to $65 million in XRP purchases. Not too shabby. And then Franklin Templeton shows up with their EETF, easy peasy. This thing's basically a buffet with Bitcoin, ETH, Solana, DOGE, ADA, XLM, and LINK all bundled together. The whole landscape is exploding with these index funds popping up everywhere. Some are giving XRP a seat at the table, others are passing on it completely. Really depends on who's putting the fund together. Now let's hear what Jake Claver has to say about XRP supplies drying up on exchanges. Take a listen to this.
XRP not going away from retail. It's being rerouted, abstracted, and gated. Cold storage, more essential than ever. Yeah, I definitely would get your assets off of exchanges as soon as possible. Coinbase is down to like almost nothing for their XRP available to retail. You've got other exchanges lowering their liquidity for retail on XRP. Robinhood is suppressing your ability to make withdrawals. Get your stuff on a cold wallet. And again, if you want to leave it over there on Caleb and Brown, that's your prerogative. I would highly recommend a cold wallet. And again, everybody asks me what cold wallet. I say decent, but there's a lot of good ones out there. There's Tangem, Arculus, EliPal, Trezor, like it goes on and on and on. The only one that I don't use is Ledger. And it's for many reasons, including the UI and just how cumbersome it is to use.
So here's the crazy part. XRP reserves on exchanges fell by a massive $1.32 billion from November 10th to December 10th. Yeah, you heard that right. $1.32 billion in XRP evaporated in 1 month flat. Now fast forward 6 to 12 months from now and picture what's coming. Exchanges are going to be looking at empty shelves while buyers are banging on the door. The second we hit that breaking point where demand is screaming but supply's tapped out, that's your green light. XRP's epic journey to Valhalla starts right there. Listen to this.
If we look at this chart here for XRP as well, which is a very sort of similar sort of fractal, and it shows this staircase. And I've tweeted this on X, and it's called the staircase to Valhalla. Okay, and you can see that evidently XRP has been accumulating, breaking out, reaccumulating, and is now looking for a decision, potentially where we've got this markup phase, which takes it to double digits. Now, I've marked 2 sort of scenarios. One is where we actually deviate below and come to fill in the wick from October, and we actually lose support here and again put the fear into people's minds, when in fact if we do actually come back to this sort of territory which sits at sort of $1.42, you'll notice that it actually ties up with the highs and the candle closes of May of 2021, and that's exactly where this wick from October has actually found its level of support. So if that wick does tend to get filled and we do see XRP get a sweep, then in my honest opinion, this could be a massive spring leading into sort of Q1 of 2026 that would bring XRP right back into this accumulation sort of block, the trading range, and then go for the markup push. That's scenario 2. So importantly with scenario 1, just as equal coverage, we could actually hold the $1.90, which is the vertical accumulation support in this accumulation phase. We could actually hold that as support here, build up for another couple of weeks, and then attempt a run up to the vertical accumulation resistance. So there's two sort of scenarios, and either way, I think that 2026 is looking to be a prosperous year for altcoins, and I don't think it will be any different for XRP, especially with all of the bullish news, the fundamental developments, the acquisitions, the ETF inflows. It's just non-stop, and obviously this sort of range for the last year has just got people right on the edge of their seats and panicking. When truly this could be one of the biggest opportunities for XRP if you missed out prior to the run in sort of November of 2024.
Okay, so Lord Belgrave. This guy says he's a former City of London banker. We've brought up Lord Belgrave more than a few times around here. According to him, I need to choose my words carefully here. What I'm about to describe comes from a meeting in Brussels between senior bankers and EU policymakers that is intended to remain highly confidential. I'm sharing this with you in principle, not as disclosure of protected documents, but because the direction of travel is now impossible to ignore. The digital euro is being designed for full on-chain trade finance. This will be a strategic architecture for the next generation of European commerce. The workflow presented in the room was remarkable. Ship arrival. The moment a vessel enters port, authenticated geodata and live video feeds are captured and written into a blockchain. World activity becomes a programmable event. Container unloading. As soon as the cargo reaches the client's storage, an RFID signature is recorded on chain. No paperwork, no manual checks, no reconciliation lag. Proof of delivery becomes instantaneous and incorruptible. Settlement execution. The moment the chain confirms delivery, the digital euro moves automatically to the seller. No correspondent friction, no multi-day delays, no trapped capital. Settlement becomes a function of mathematics rather than administration. This is the future of trade finance. Automated, event-driven, regulator-approved, and entirely on-chain. And here's the part that matters to us. During that meeting, one requirement was emphasized repeatedly. For cross-border functionality, the digital euro will need a neutral settlement asset, capable of bridging currencies and supplying liquidity with instant finality. XRP and the XRP ledger were referenced as the leading architecture to fit this profile. Europe is not improvising. Europe is engineering a new financial standard. The digital euro will not run on outdated rails. It will run on blockchain settlement networks that can process real-world events and execute payments at machine speed. You were never meant to see the full scope of this yet. You deserve to understand what is coming. Cargo hits the port, but payments crawl through the system for days. Your shipments lock down at the dock, waiting for the cash to finally process before anything moves forward. Picture this, just 3 days of delay per shipment. You're running 1 container per month through that port. String together 12 months of those 3-day waits and boom, 36 days annually where your merchandise is paralyzed on the docks doing zilch. Flip that scenario on its head with real-time settlement hopping between currencies. The sheer volume of commerce you unlock is mind-blowing. XRP was engineered specifically for worldwide settlement liquidity. And guess what? That's still its lane today. More liquidity for the XRP ledger. People still think XRP is competing with stablecoins. Stablecoins are the vehicle. XRP is the engine. One moves value, the other settles it. This window won't stay open forever. Stay hungry for knowledge. Keep sharpening your understanding. Keep feeding your brain. The education you're stacking right now, that's your real wealth. Thanks for rocking with me one more time. I'll catch you on the next upload.